And moving over to markets now, and there's been a lot to keep an eye on this week. Soybean sales to China have been lower than they should be under the terms of the Phase 1 agreement. Furthermore, the global supply chain continues to endure strain. And joining me this week to discuss those topics and more is Heartland Farm Partners President Jeff Peterson. So, Jeff, let's go ahead and just get started here with your take on the quarterly grain and stocks report. It looked like corn was looking up while soybeans were kind of on a downtrend. What were your thoughts or takeaways on that?
You exactly nailed it. You never know when you have a quarterly stock number come out what to expect, but they definitely, we saw higher stocks on the corn side. We saw higher stocks also on the soybean side. The 1.236 billion bushels on corn. In the WASDE report out of September, it was 1.187 billion, so they brought it up slightly. The beans was a bigger surprise at 256 million bushels. That compared to 175 million in the September WASDE report. So, we ended up bringing both those stocks up. The probably thing that got the most attention was the soybean number. And the reason was because the ending stocks were high enough that it did put some pressure on soybeans. And the main thing is not only was it higher than the trade guess, it was actually higher than kind of the range of estimates. So that was a big surprise to the market.
So how have soybean sales been looking with China in particular?
Yeah, that's the thing that everybody's got a close eye on. We're a little concerned with China that they haven't been in buying as much as we normally expect. Usually this time of year, we're expecting them to be big buyers. Right now, when we compare what the sales have been to China compared to a year ago at this time, they're down almost 35%. And the confusing part about this is it sure looks like their hog herd is probably just as large as it would have been pre-African swine fever. So everybody's trying to wrestle and figure out, did we miss something? Are they going to pull bushels out of stocks? Are they physically going to try to source the bushels, from Brazil and just wait a little bit longer? Are they going to adhere to anything on the Phase 1 trade deal? That part comes into too, because that last year we just said with the Phase 1 that it was maybe spurring some purchases. So those are all some of the types of questions that are coming in right now. And unfortunately, we don't have a lot of great answers. We would believe that they need to step in and buy more bushels from the U.S. We don't think they can get all the way through to when Brazil has their next crop, and purchase less overall. So we're still expecting those exports to pick up, and we're expecting the shipments to pick up. We think some of the thing that could be going on is that beans were tight. Even though we just talked about the fact that there's more stocks, the pipeline was very tight on soybeans. So they could be waiting for a few more beans to flow in, and also for that situation at the Gulf to improve. So we've got more ability to get stuff exported out too.
And that brings up the next question. Let's focus a little bit on the global supply chain. So over the last couple of weeks, we've been seeing reports of continued or worsening strain as far as transport, labor. How are these problems impacting producers locally here?
Yeah, a few of the things that we're noticing, so big thing we're hearing about is I think it's going to be on the crop input side. I think we're going to continue to see talk about higher fertilizer prices, not just talk of it, but also fertilizer prices, whether you're talking about anhydrous ammonia, whether you're talking about liquid fertilizer. We're also hearing concerns about on the chemical side, the herbicides. We're also hearing that because of some supply shortages, whether for whatever reason, that could have some impact on what the availability of supply there. So in the end, what it really looks like is that we're going to be talking about higher costs of production for guys as we start talking about that 2022 crop year. And
you just segued straight into the next question here. We're really looking at an all-time high here in 2022 for corn production. What are input costs looking like now? What are we projecting? And do you have any advice on that front for producers?
Yeah, I really do. And it's a great thing to start talking about, because right now, most of the seed costs are out and they're going to be up slightly. Fertilizer costs are going to be up probably the highest along with the chemical side. So if you can go ahead and get those prices locked in, unfortunate part, in many cases, you may not be able to get the prices locked in, or they may have already moved up. But what it's going to cause some individuals to do is it's going to cause them to kind of think about, well, wait a minute, where and which crop should my acres get put into? So should we and could we have some acres from corn get switched over to soybeans because they don't want to pay as much, on the fertilizer side? Chemicals probably would be comparable between the two. But then as we move into some other areas, it brings up the whole discussion about acres and ultimately, are there going to be other crops? Are some of the acres going to go into cotton? Are some going to go into spring wheat or winter wheat or oats or different other crops? So I think part of what we'll end up seeing is a battle for acres. And we're starting to see that kind of develop, and how we're seeing that as we look at prices is that, like corn, for instance, on the December 22 contract, it's been really firm and actually been kind of increasing and faring better than what we've had for, these old crop bushels, the harvest or the bushels that they're harvesting now. So we're starting to see kind of that battle line start drawing up.
Excellent. Before we let you go today, do you have any, management or risk management or marketing advice that you'd like to share with our viewers?
Yeah, I really do. This time of year, a few things that we really got to think about. Basis-wise, we're continuing to think that the basis is going to continue to get stronger. I think we're getting through a lot of our areas here where bean harvest is well along its way. It's many areas have went over that 50% level. Mm-hmm. So I would say we're going to see some improvement on basis levels yet. So if you've got some post-harvest bushels yet, on the soybean side that you haven't sold, we think the basis is going to improve more. We also think on the corn side we'll see a stronger corn basis also. So keep your basis open there for harvest, and also post-harvest we think we'll see some stronger numbers yet. For sure the post-harvest side is where the stronger numbers will be by far. As you get into the stuff for harvest time delivery, there, if you've got some good bids, go ahead and don't hesitate to lock up your basis on that. And then we're looking for post-harvest. We think we'll see some better prices on corn for sure. Beans we got to watch closely. And so if you're hesitant on the bean side of getting some sales made, maybe to make a sale and buy a call to give yourself some protection there, that's okay too. But overall we're optimistic prices going forward.